Bitcoin tops are brutal. They're fast, euphoric, and then suddenly it's all over. Miss it and you could be underwater for years. That's why in today's video, we're diving into 3 of my favourite indicators that have successfully identified every single Bitcoin cycle peak in the past. Each built on a completely different logic and even more powerful when used together. So let's get into it. Before we jump into details, it's important to understand why relying on just one indicator can leave you vulnerable. Markets are complex, and no single tool captures the full picture. Each has its own blind spots and limitations. If you base your decisions on just one perspective, you risk missing critical signals or getting false alarms. That's why using multiple indicators that measure different aspects of the market can give you a much more reliable edge. These 3 stand out because they each look at the market from a completely different lens. So when they all align, that's a powerful signal. This makes them especially valuable when used in combination, as they're not just echoing the same data, they're giving us distinct views of the market from different angles. Now, let's walk through each of them one by one and break down what we're looking out for so you can be better prepared as the cycle matures. The first indicator is called the logarithmic deviation torch. This is a dynamic risk visualizer that plots coloured dots above the price chart to indicate varying levels of market risk. Essentially, the more overheated the market is, the redder the dot becomes. It's based on the logarithmic deviation from its 374-day simple moving average, using a log-based function that's scaled by time. In technical terms, it uses the bar index raised to a power to factor in both price displacement and time decay. But in plain English, this just means it measures how stretched Bitcoin is relative to its longer-term moving average over time, factoring both speed and magnitude of the move. The lighter dots mean lower risk, and the deeper red dots mean higher risk. On the weekly time frame, this indicator becomes especially useful. While it gives us only 1 dot per week, they tend to be higher conviction and more reliable. Each historical cycle peak has featured 2 to 5 dark red dots, meaning the true market peak has only lasted for 2 to 5 weeks on average. So in the context of a typical 4-year Bitcoin cycle, that's just 1 to 2% of the total cycle length, so timing really does matter in this sense. It highlights just how fleeting the top really is. But what about where we are right now? Well, the current dot is a light orange, signalling moderate risk, pretty much middle of the pack. While we've seen dark orange dots appear during the moves to $70,000 and $100,000, no red dots, neither light or dark, have appeared yet. That suggests to me that we've still got plenty of room to run, and the true peak likely hasn't occurred yet. Now onto the second indicator called the secore probability waves, which is one I've covered in detail in many other videos. This is one of my favourite probabilistic tools for identifying mean reversion opportunities across any time frame. Right here we're applying it to the weekly chart to maintain a macro perspective and smooth out any noise. The further price moves from its mean, the higher the z-score, and the greater the probability of a reversal. What we've seen historically is that Bitcoin peaks align perfectly with the indicator hitting the upper band, which is the +5 sigma or standard deviation level. That's when price is extremely stretched, both emotionally and technically. But that doesn't mean you have to wait to the +5 sigma level to take action. Scaling out at +4 can also be a solid approach, especially if you're being cautious or looking to de-risk as the euphoria builds, which is a pretty smart strategy. So far this cycle, we've breached the +3 sigma level during the ETF rally, which captured a lot of price movement and upside momentum. And sure enough, we saw a mean reversion not long after that. But so far, we haven't reached the highest deviation zones yet. What's especially useful is that this indicator dynamically updates the price levels for each deviation band. And right now, if price was to shoot up vertically, the projected peak sits at around $174,000. On the flip side, if we enter the bear market from here, a likely bottom would be around $62,000, with a worst case drop to $44,000 if we saw a similar capitulation event similar to what we saw post FTX crash in the previous bear market. Now, these price levels adjust daily as the market evolves and the volatility profile changes, so this is definitely one to keep checking in on as the conditions shift. But right now, they're only getting higher and higher as the bull market continues to evolve and accept the higher price levels. Now finally, the third indicator I'm watching closely as we approach the next potential peak is what I call the macro cycle master. This one's really straightforward to interpret, but there's a lot of complexity under the hood. It aggregates 6 of the most reliable on-chain indicators into one unified model. When 3 or more of them agree, so at least half of them, it triggers a background colour: red for a macro top, green for a macro bottom. This makes it extremely easy to interpret at a glance, even if you're not deep into the technicals of each underlying metric. It's an elegant way to get a high conviction signal without having to track 6 separate models or spend time cross-referencing individual indicators. That said, this isn't a day-to-day chart. Most of the time, like you see now, it won't be showing anything at all. But when you're starting to think that the market's heating up a lot and want some fast confirmation, this tool gives you a clear visual answer almost instantly. In 2021, it flagged several signals right around the top, but in 2017, it flagged just one big signal. That contrast alone shows how different cycles can behave. Whether it continues to deliver that kind of accuracy remains to be seen, but it's been a great complement to the other 2 technical tools, giving you an on-chain lens to balance against pure probabilistic price action. Especially in moments of uncertainty, having a macro signal that's based on underlying investor behaviour, which is essentially what on-chain data is measuring, adds another layer of confidence to your analysis. I use these tools all the time and I'll be keeping a close eye on them as the cycle progresses. So let me know in the comments if you want a deeper dive into any of these indicators and I'll make it happen. So, to wrap things up, the big takeaway here is that while each of these indicators approaches the market from a completely different angle, one based on price deviation, another on statistical probability, and the last on deep on-chain data, they've all historically converged right around the same moment, the cycle peak. That kind of alignment across totally independent metrics isn't something you see often, and when you do, it's usually a sign you don't want to ignore. But timing the top in Bitcoin is notoriously difficult, and what makes it even trickier is how short-lived it typically is. When we look back at previous cycles, we're talking about a window of just 2 to 5 weeks. That's only 1 to 2% of the entire typical cycle length. So if you're relying on emotion, news headlines, or simply price data alone, the chances are the opportunity to lock in gains will slip right past you. That's why high conviction tools that can narrow down that window are so valuable. And finally, what I really like about combining these 3 tools is that you're blending 3 different disciplines: technical price-based analysis, probabilistic extremes, and on-chain behavioral data. 2 of them tell you how far price has stretched from its mean in different ways, and the other shows what the underlying investor behavior looks like beneath the surface. When all 3 start flashing topping signs, that's when I want to be paying close attention. Because in markets like this, it's not about being perfect, it's about being prepared. If you're serious about Bitcoin analysis, my full custom indicator suite is now live. Built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.